Altaf Jivani, who's Global CFO at Welspun India, joins us to talk about their numbers. Altaf, it's good to have you on the show. Let's start off by understanding why has the 8% year-on-year volume growth not translated into a strong earnings this quarter? What has been the reason behind margin contraction? Can things improve come Q2?
Q1 actually we have seen a volume growth of 8%. Now optically it may look muted because in the Q1 last year, was a pre-GST regime where the drawback rates were much higher. So 7.5% has come down to 2% and ROSL from 3.5 to 2.2. And that is why you see the impact. So if you really want to compare, Q4 was a similar tax regime and Q4 we were EBITDA margin of 19%, which is now gone up to 20.6%. So there is a substantial jump in the EBITDA margin. So we did 1,578 crores of revenue and about 325 crores of EBITDA margin. And we have seen in the current quarter actually spaces has grown by 18%. So that's a substantial jump. Similarly, we have seen Christie actually has seen a substantial improvement in the Wimbledon season this year. They saw a situation where that special edition towel of Roger Federer was sold out in 1 hour in the stores at the site and about in 4 hours online. We have also seen a kind of Christie e-commerce growth actually has more than doubled in the last quarter, Q1. So that Christie and Spaces, both our focus continues to be on the brand building, and most of the initiatives which we are actually implementing has started showing results. So we believe this year the annual guidance which we have given of about 8 to 10% top line growth and about EBITDA margin of 19 to 20%, we will be able to achieve that very confidently.
Okay. Can you also outline for us as percentage of your total business, how much essentially is coming from space now?
Because we have, domestic business is roughly about 6% of our whole revenue. So 94% still continues to be the international business. So it is only in the recent past we have started focusing on the domestic business, and our target is to take this to about 20% of our overall revenue in the next 5 years. So our target is to have $2 billion revenue in 5 years, and out of that $400 million will be from domestic business. So one of the major pieces will be spaces in that, and the other big piece in the jigsaw puzzle will be for the flooring solution. So we are investing about 1,100 crores in Telangana, where we will be putting up a facility of 27 million square meters flooring solution, and this will be ready by October to December 2019. So we expect that business to be another almost $150 to $200 million in 5 years' time.
The problems which were about specific clients in US, have those problems been sorted out? Is your home textile business back to normal in US?
So home textile, we had an issue with one of the customers. So except that, the rest all we continued, and we continue to keep building our relationship with the customers over there in US. And we are seeing a lot of traction in the US market. So whatever destocking we saw last year seems to have been behind us now, and we are seeing substantial volume growth in the coming quarters as well.
Right. Give us your own sense on how you would be able to extrapolate these numbers over FY19 in terms of sales and profits. The muted Q1, do you think can pave way for a stronger financial year performance?
Yeah, so Tanvi, last quarter also when we guided that 8 to 10% growth for the current financial year, we had already mentioned that the first half will be muted, particularly the first quarter optically, because of this change in the drawback rate. Now, effective July onwards, we will see again will be almost comparable tax regime. So we will see a situation where the second half growth will be substantially higher than the first half, and therefore the average we are confident we'll be able to achieve 8 to 10%.
Okay. We wish you the very best, Altaf, for the future. Thanks very much for taking out the time and joining us. Thanks very much for giving us those details.